Yeah, good morning, everyone. The Fed came up with, as expected, 0.25% increase in the interest rate. But what was earlier, what they were indicating that they will be having a 2.25% increase. Now they had changed this 10 to that further increase will depend on the data. And whatever the data which has come were indicating and market was factoring in that there will be only one interest rate increase expected in uh, which has come. Now, September meeting, the expectations are that the interest rate will not increase and will remain flat. Uh, Apart from that, one more development which Fed has pointed out and which should be noted is that they had said that the US government may not face recession and may see the economy may be softening but not recession. Considering that, though yesterday the US market was more of a flattish, but today Asian markets are showing a strong trend. Most of the markets are up by at least 2.5%. And apart from that, futures are also marginally positive in the US market. And the commodity also seeing some positive trend, though oil continue to remain flattish at around 83.5 dollar Brent. But iron ore is up by around, iron ore is more of a flattish, but steel is up by around 1%. So more of a positive indications from the international market, and market may see positive trend today in the Indian market as well. I'll request uh, technical team to take up from here.
Yeah, thank you, sir. See, after the Federal Reserve commit today, Indian market opened a gap up, and we saw that last few trading session in the Indian market, Nifty facing the resistance around 18,000, 19,850, 900. If today's after gap up, Nifty managed to sustain 18,900 level 19,900 level, then we expect further rally towards 20,000 above level, that is 20,170, 20,200 in upside. To today's after gap of first 20 minute, we closely watch that important level, that is 19,900. If Nifty break that level and sustain that first 20 30 minutes, then we expect rally to be continuing today's session also, and with monthly expiry also Nifty managed to sustain at least 19,840 level, then we expect next 1 week 2 week in positive side in index. If Nifty fail to close above 19,840 level and close below that level, then we expect a sideways moment today's session. Downside, first immediate support place around 19,700 and 19,600 in downside. The today's after gap up first 20 minutes, if Nifty managed to sustain, then we expect the intraday rally towards 20,000. Otherwise, Nifty trading the after gap up trading within the range. Bank Nifty also facing immediate resistance 46, 200 and 300 and upside. Is Bank Nifty break that level and upside, then we expect further rally 46 500, 46 700 and upside. Intraday major support place around 45 840, 45 500 and downside. So we can closely watch 2 days, and monthly expiry in Bank Nifty managed to sustain 46 200. Then we expect the further rally to be continued week, next week. Nifty Finance also trading near this resistance zone. That's first resistance place in 20,690 and 20,760 upside. If break that level, then we expect the positive momentum. Till date, we saw the Nifty 20,570 above. They're trading the within the range. To Nifty Finance, first immediate resistance 20,690 and first support 20,570. Stock specific. Tata Steel looks positive at current level. Tata Steel also managed to sustain the important level yesterday. Do we expect this moment to be continuing upside towards 128, 120, in upside? First support place around 114. Next, ICICI Bank also trading near the resistance zone. If ICICI Bank break the upside, that resistance around 1004, then we expect further rally. Reliance Industry also trading the near the support zone, that is comes around 2490 at downside for 2470. If managed to sustain this level, then we expect Reliance also managed to trading upper range. Up next immediate range around comes around 2550 first intraday resistance, then 2630. Second, we already given call in Deepak Nitrate. Deepak Nitrate also looks positive at current level. Next immediate target place around 2100. 1950 is a immediate support for Deepak Nitrate. In pharma sector, Oro Pharma looks positive at current level. We already given call in Oro Pharma. Above 790, we expect the momentum to be continue around 822 and 770. In mid cap, EID parry looks positive at current level. We saw that weekly breakout in EID parry. Uh, do we expect this momentum to be continued towards 530, 514 upside? Downside, major support place around 486, 85. That's 200 DMA. Do we expect 100 DMA? We expect the EID parry looks in weekly charting strong. Do we expect strong momentum in EID parry with stop loss 485, 484? 484 and upside 530, 540 next immediate target. That's it for technical derivative guy can get.
Yeah, thank you. Good morning, everyone. So on the derivatives front, as we are seeing that, and as I said in the previous trading session also, that once Nifty went into the range of 19,600 to 20,000 mark, at that point of time, I told that once if Nifty goes below 19,500 level, then only fresh short position need to be initiated, or else pullback will be seen strongly in coming trading sessions. While from last 2 3 trading session, we have witnessed that the sell-off was being witnessed, but from 19600 to 19800 range, we were continuously seeing that the put writer positions were getting added on. While in yesterday's session, the positive factor which we have seen is that at 19700 strike call writer positions got liquidated heavily. Almost 7 million positions of a call writer got liquidated at 19700. This is a positive sign. While PCROI also reversed in yesterday's trading session from 0.78, which was the support for PCR, it reversed from that level towards a 0.85 level and gave closing at 0.85 zone. So currently view tends to be positive. Only the resistance which we are facing right now is 20,000 mark, because at that level we are seeing that almost 20 million positions of call writer is being added at a 20,000 striker. So if Nifty gets a clearance about 20,000 mark, then we will see the range to be shifted on the upside toward 2200 to 2300 level. So overall market scenario seems to be positive as per the derivative data point. We should hold the long position and can create new long position with the support of 19,500 level. While on the stock specific front, we are seeing that in yesterday's session, Tata Communication has seen fresh breakout and fresh long positions has been initiated. So we can expect Tata Communication to show some fresh buying in today's trading session also. Well, another counter which looks positive is Intellect, Gale, and Coalpal. These three counter also have shown some fresh breakout in next trading session. So we expect buying in these three counters. So that's it from the derivative front. Thank you.
Good morning. Uh, 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 Yesterday, RBL Bank and M&M both conveyed that M&M has acquired 3.5% stake in the bank. Stake was valued at 417 crores. Mahindra also said that they may consider further investment. up to a maximum of 9.9% stake. So this will be perceived as positive. Already stock had been moving up on this rumor since last couple of days. And if M&M does increase stake to almost close to 10%, then there will be further scope for upside in RBL Bank. Geo Financial Services and BlackRock have signed JV pacts to foray into asset management sector. The 50-50 JV will deliver tech-enabled affordable investment solution. Both parties will initially invest almost 1,200 crores each in the JV. This is positive for Geo Financial Services, and sentimentally it will be negative for listed asset management companies. Bajaj Finance result was marginally above expectation. AUM grew by 32%. FY24 AUM growth guidance has been upgraded from 25 to 29% range to 29 to 35% range. In the previous quarter, company had guided that NIM will come off by around 30 basis points in the current year, and they have declined by 11 basis points in Q1. And company expects that they can further come down by around 10 to 15 basis points in Q2 as well as Q3 each. Asset quality remains pristine, and NPA levels are at historically lowest levels. Stock is trading at 27 times FY25, which we believe is fairly priced, but keeping in mind the high growth trajectory of 25 to 30% earnings growth for next 2 to 3 years, we think that it's a decent compounding stock even from these levels. Axis Bank result is in line with expectation. Advances grew just 1.6% sequentially, but 22% year on year. Net interest margin declined 12 basis points and came at 4.1%. Although they have not, although bank has not guided for NIM going forward, but they did mention that cost of fund will keep rising throughout FY24. OPEX also increased 10% sequentially, which led to slight increase in cost to income from 45 to 48% on account, mainly on account of onboarding of Citibank employees as well as annual wage revisions. A total of around 2,000 crores will be spent towards integrating the Citi portfolio over next 18 months. So expect the cost to income to remain elevated. On the asset quality side, it was a stable quarter. Also, ROA came at 1.8% for the quarter. We think this is a steady state ROA number, and next year we will see further increase to about 1.9%. We remain positive on Axis Bank. REC result has improved. Quarter on quarter PNL was broadly stable. However, growth metrics have improved quite a bit. Sanctions increased over 50% year on year. Disbursements more than doubled. This led to loan book growth accelerating to 17% on year basis. Stock is still available at 0.75 price to book for good loan growth and ROE of almost 18-19%. We think this valuation is cheap, and we think stock can be rate to one time over next 2 to 3 quarters. So we remain positive on REC. PNB result was okay, and overall it was subdued on the PNL front with ROA remaining at just 30 basis points. However, slippage has declined to decadal lows of 1.1% versus 2% seen in March quarter, indicating that future credit cost will be much lower than what we have seen in last 2 to 3 quarters. Even in June quarter, credit cost was at 1.8%, so that has scope to come down, and that can increase the ROA in coming quarters. So although based on results we are neutral in the near term, but from long-term perspective we are positive on PNB. Aditya Birla Sun Life Asset Management result has improved. Revenue and EBITDA grew by 5% and 7% sequentially on the back of AUM growth of 8%. Overall market share was stable at 7.7%, but if we break it down, the equity mix in the overall AUM has come down, and the market share in equity segment has continued to decline. This quarter it declined by 20 basis points to 5.4%. So we are not enthused by Aditya Birla's performance in last few quarters. We remain neutral on Aditya Birla. Thank you.
Good morning. Tech Mahindra has posted below expectation numbers for the quarter yesterday. CCQOQ revenue growth came at negative 4.2% versus expectation of negative 2%. Some transformation project coming to an end, client turned bankruptcy, led to lower than expected revenue during the quarter. EBIT margins also dipped by 438 bips QOQ, which had one-time provision due to customer declared bankruptcy by 2%. Other than this, revenue drop, seasonality in Kumbhima business, and wage hike impacted the margins. Management indicates recovery in H2 and higher growth, more offshore mix, and correction in employee pyramid would be the margin levers going ahead. Outlook is negative. Stock is trading at a P of 18.6 times FY24 EPS. Sasket Technologies has posted decline set of numbers for the quarter, both on the revenue and the margin front. Stock is trading at 13.7 times TTM EPS. OFS, Oracle Finance, also has posted decline set of numbers for the quarter, both on the revenue and the margin front. Stock is trading at a PE of 18.2 times TTM EPS. Thank you.
Yeah, good morning. Recent result was above expectation, mainly due to higher volumes, which stood at 8.9 million tons of expectation, 8.8 million. Realization was above.
Yeah, you're not.
expectation.
Avish,
Hello,
your voice is very low. Can't understand.
hello.
Your voice is very low.
Am I audible now?
Yeah, better.
Yeah. Realization per ton stood at 5,600 versus expectation of 5,200, mainly due to higher premium product sales, which rose to 8.8% as compared to 6.6% year-on-year basis. EBITDA per ton stood at 1,044 rupees. This is expectation of 969. Margins were above expectation by 300 basis points at 18.7%. Apart from this, company has announced cement expansion of 12 million ton at Rajasthan, Uttar Pradesh, and Karnataka, with a total investment of 7,000 crores, which will be met by internal approvals and so this is positive for Shri Cement. Jindal Stainless Limited result was above expectation. Volume were in line with expectation at 0.55 million ton. Uh, Revenue came in at 10,184 crores versus expectation of 9,460 crores. EBITDA came in at 1192 crores versus expectation of 995 crores. Margin saw major improvement at 11.7% versus 10% year-on-year. The stock is trading at 12 times FY24 EPS. Thank you.
Good morning. Colgate Palmolive India Limited has posted the results, and results were above expectations. The revenue grew by 10.6% YOY. This was largely due to if we expect mid-single digit volume growth was done in the first quarter of FY24. This was due to the recovery in oral care category, which was not performing in the previous quarters. The EBITDA margin also improved at 31.6%. This was largely due to the gross margin was up by 210 basis points on a YOY basis due to the decline in raw material cost pressures. Our view is neutral on the stock, as the stock is trading at a PE of 38 times FY25 EPS. The Tata Consumer Products Limited result was broadly in line with expectations. The revenue grew by 12.5% YOY versus expectation of 3,760 crore. There was a strong growth of 16% in India business, and international business grew by 7% overall. The EBITDA margin reported at 14.6% versus the expectation of 14.3%. The stock is trading at a PE of 57.8 times to FY24 EPS, and our outlook is neutral at these levels. Fine Organics Industries Limited result was below expectations. The revenue degrew by 26.8% on a YOY basis at rupees 547 crore, and the EBITDA margin reported at 25.8% versus the expectation of 27%. The stock is trading at a PE of 30.9 times to FY24 EPS, and the outlook is negative. Thank you.
Good morning. IPO by the name of NetWeb Technologies India Limited is going to list today. The stock is expected to list at a healthy premium of over 70% from the price of rupees 500 per equity share. This company operates in HCS industry comprising of its own middleware stack, wherein it offers supercomputer system, private clouds, enterprise storage system, data center servers, software and services. The industry-wise users includes higher education research institutes, IT sector clients, space, defense and BFSI. It possesses higher growth and return ratios compared to EMS players and is also available at cheaper valuations. As such, there are no directly comparable peers in the listed space who are present in this HCS industry. Thus, we have compared NetWeb with EMS players who are mainly into manufacturing of electronic components. Over FY21 to FY23, company's revenue growth has been high as compared to peers at 76% CAGR, and so its ROCE, which is at 52%. As peers are trading at average PE of over 70.8 times FY23 earnings, while NetWeb is available at 59.7 times. Thank you.
Yeah, apart from this, Dr. Reddy reported strong numbers, mainly on account of launch of Revlimid, where they got exclusivity and large growth has come from that. Apart from that, there was an acquisition in the US by the Dr. Reddy, and which has contributed to the revenue growth. But apart from all these things, the base business has also seen a lower price erosion, and that will act as a positive for the company. So overall results look good, and valuations are also reasonable at around 19 times FY25 earnings. So outlook is positive for the company. Apart from that, uh, C8 had a con call yesterday, and that has indicated that the raw material decline was around 1.1%, whereas the pricing has remained more of a stable. So that has seen gross margin expanding in this quarter. Apart from that, they had a high SG&A expenses, mainly on account of IPL, that has resulted into decline in increase in operating in other costs by around, had an impact of around 0.5% on the EBITDA. So overall EBITDA seen lower increase as compared to gross margin expansions. Going forward, prices are likely to remain stable and raw materials are also stable. So company expect to maintain the current margin. Apart from that, growth-wise, company is seeing growth in passenger vehicle of around single digit. Two-wheeler can see higher growth if the monsoon sustained, and company can expect double-digit growth in that in volume. And off-highway anyhow is doing very well for the company on export side. So overall seems long-term outlook positive. Valuations are a bit tougher for the company at current point of time. So any corrections can be used to purchase this stock. Godfrey Phillips has come up with very good numbers. There is a component of trading, sales and purchase where they do leaf sale of tobacco. But excluding that also, the performance seems strong and the valuations are reasonable at around 11 times. And also, company has declared 44 rupees as a dividend in this. Another company, small company, Vesuvius India, has reported strong numbers, wherein the revenue has grown by around 22% year on year, and EBITDA margin has expanded to 17.2% versus 15% last quarter and 12% last year. So overall seems quite strong number for Vesuvius India number. So that's all from us. Now I'll request commodity team to take up from here.
Thank you, sir. Very good morning, all of you. For today's trading session, we are expecting a range bound movement in USD and R on 29 August expiry. So if we get any pullback around 82.04 to 82.06 levels, no one can initiate a short positions with a stop loss of 82.15.75 for the target of 81.93 and 81.85 levels. In JPY INR, one can initiate a long positions in the range of 59.03 to 58.95 levels with a stop loss of 58.59 for the target of 59.37 and 59.63 levels. In Euro INR, one can initiate a long positions in the levels of 91.13 to 91.07 levels with a stop loss of 90.87 for the target of 91.34 and 91.50 levels. Thank you.